Welcome to Before the Bell, your home for actionable pre-market content. My name is Chris Buss with Traders Profit Compass. It is 6:45 on January 27th as I'm starting the video. Let's dive right into it. Don't forget to run your player at 1.5x for maximum efficiency. Pretty flat across the futures complex. Of course, as what normally happens, the FOMC killed gold, so I'm just about to throw in the towel on gold. Lots of heartbreaks and head fakes and everything else. Looking over on the macro front, we've got some important stuff today. We've got durable goods. We've got a GDP print. We've got jobless claims, nat gas inventory, and a 7-year bond auction at 1 p.m. over on the earnings front. Of course, we had Tesla last night. We've this morning before the bell, we've got MasterCard, McDonald's, Valero, JetBlue, Southwest Airlines, and Tractor Supply. After the bell, we've got Apple. That'll, of course, be a big one. Visa, U.S. Steel, and KLAC, the semiconductor manufacturing company. So very, very broad, diverse set of earnings today. So this, of course, is the day after the FOMC statement. And is often the case, it's not the statement that gets you in trouble. It's the talking about the statement, right? So yesterday, they in the statement, they pretty much reiterated the game plan, which is to wind up asset purchases by March and then start a rate hike cycle. And then, of course, all the questions come in from the journalists, and Powell starts talking and slowly starts digging the hole. I pulled out a couple of choice one-liners, and I think this one was significant. I've got it written down here. I'm going to read it directly. I think there's quite a bit of room to raise rates without affecting labor markets. So, market didn't like that too much. Also, he said in passing, asset prices are somewhat elevated. So that was the 1-2 punch that I took out of the statement. Of course, I'm not an expert on the Fed in parsing all these different words and stuff. I'm more of a price action guy, as you know. So let's dive into the charts and see what happened. First of all, starting with the dollar, we got a pretty significant jump yesterday, and we're coming back up to the top of the range, which I think I should have this marked, but the last FOMC statement, I think we were at the top of the range as well. I would have in your system, even if you're not trading it, on the dollar, I think this 96.75 is an important level. That would effectively take out this trading range up here. We dropped down below and then recaptured it. That in and of itself is a bullish move. We're above all the moving averages. So a breakout, and we've got a bull cross here, pretty much at the zero line, and a breakout in RSI above 50. So just from a technical standpoint, the US dollar is in a bullish posture, and I think you break out here to send dollar even higher, then it would be have an open path to even higher prices. And so that would normally, you'd expect, be a stiff headwind for commodities, stiff headwind for precious metals, and a headwind for emerging markets with all that US dollar denominated debt they've got over there. So before I go off the page, I want to welcome any new visitors to the channel. I really appreciate your time this morning. Hit that subscribe button, hit the alarm bell, hit the post notifications, hit the like button. That helps me a lot in YouTube to be found. And also over in your show notes, you'll find a place to a link to the blog site where you can drop in your email and get all my content sent directly to your email box. That way you won't have to hunt for it. And then over here, there's some extra information for the registration process, which is double opt-in. And that seems to throw a certain amount of people off when they're not expecting that confirmation email, just to give you a double check on registering for the content. So let's plow forward. TLT, rates up, TLT down. I think 141 is your pivot point. And then you've got this consolidation range that runs from 134 to 139. That will be a big area of support right here for TLT. If you break below 139, that would then open up the door to 136.50 and then 134 on the downside. Yesterday in the morning on the VIX, we opened below 29 in this 28 area. We had a little rally going into the Fed, which pushed VIX down, and then of course on the afternoon sell-off, it jumped back up here. I think you still want to have VIX on your dashboard watching for intraday trends. If it starts falling, of course, that'll be supportive of higher prices. If we make another run at 36 or higher, you're going to see a lot of red on your screen. This is the thing that is most concerning. Well, I put a lot of stock in these oscillators, and we're still down at minus 80 on the NYSE. We're in a similar posture on the NAMO. So we haven't gotten the anticipated bounce from these oversold conditions. I just want to reiterate, I think, can we go lower? Yes. Yeah, they can do anything they want at any time. We know that the market doesn't need a reason to do anything. It can go higher or lower for a reason or no reason. But just from a probability standpoint, I think you've got to agree that looking back in time, moves below minus 90 really put shorts on borrowed time. So you can do anything you want on short time frames, but if you're a swing trader looking for, multi-day, multi-week type moves, this is a low probability area for duration type shorts. And if you want to be short, as we go forward in the charts, I'll show you, if you're a nimble trader and you see a rug pull in progress and levels break, yeah, you can get short on, an hourly basis. What I'm talking about is, going out in February or March for a short, I think is a low probability trade. And that doesn't mean we can't go lower and just keep going. But this rubber band is really, really stretched to the downside. And I think whether we get a meager bounce that would bring these up into the minus 40s or a more durable bounce that would get these oscillators back up to the midpoint of the range is, we don't know that. But what you're banking on a short is, breaking back down into COVID territory. And I think that's a low probability bet at this point. Moving ahead to SPY, we made a little run at this 442.50, got rejected there. Notice that's where the 8 EMA comes down. We've got the 200 at 436.50. I think that is a good overall pivot for SPY. Breaking back above the 200 and then holding it, I think, is a place where swing traders can get long with a stop just below. And then the next objective overhead would be taking out 442.50. Let's look at it on a 2-hour chart. And, from a technical standpoint, this is still really weak. And I've got penciled in here, that characteristic bear flag type look. We made a big move down. And now we have consolidated in this bear flag type setup where, from my standpoint, it looks like a bear flag that could break down. We broke down a little bit yesterday afternoon, and then they kind of bought it up into the close. But so if you're a nimble, let's just put it this way, if you're a nimble trader and you see this 421 go here this morning, that would open the door to 425 and back at the lows at 420. And maybe we come down for a double bottom, retest this capitulation low, and then bounce, or just keep going. But like I said, I think that's got to be for nimble, active traders, not swing traders that are just now, figuring out that, I think SPY's going to go lower from here, on a duration type basis. I think it's hard to do that with the oscillators at minus 80, minus 85. I'm holding off on doing that. It's very tempting to do that. So what I'm trying to do is just stay nimble within these ranges. And I think if you're a swing trader, you got to get a hold over the 200 before you can start really getting excited to any certain degree. Here on the Qs on the daily chart, we made a run up to 355, which was rejected, came back down and filled that opening gap. What you can do here this morning, let's. I stick by the same type scenario. I don't want to get short the Qs here on duration. The oscillators, beating that into the ground. But it's been such a great predictor in the past that I think you have to respect it. One thing here on the daily chart, I think if you're a swing trader, you can do one of two things. Get long on a break above 355 with a stop just below, and then see how price handles the 200 up here at 363.50. And that gives you, $8 or $9 of upside before it would hit the 200 from below. If you want to take a more conservative approach, you can treat it the same way as SPY. Hey, I'll get long after price proves it and moves back above the 200 moving average. Here on the 2-hour, you see I've got this bear flag penciled in here. And you can see here that we made 3 runs at 355 and it was rejected each and every time. I think I think on a break above 355 that can hold, that would give you an open door to the 200 here at 363.50. And this morning, if you got a sell off into 340 and you're a nimble trader, I think you can try a long there with a stop just below keeping in mind that we had the prior low back here at what is it, like 330, 333, right in that area, where we could get a double bottom low, then reverse. But if you start seeing prices that take out the prior low right here, and this goes for any stock that you're trading, just general TA principles. If you take out the prior low, that's going to bring in more sellers. So if you're nimble and we drop down below the prior low, I think you can get short there for a fast trade. Here on IWM, we've had 4 consecutive days where price has run up to 202.50 and has been rejected. You can see we did that yesterday and then closed near the lows down here at 195, actually 196. I think you can use that as your pivot today. Big picture, I mean, we've been talking about it for quite a while. Anything below 210 keeps us in a bearish posture. What we're trying to do here is capture an oversold bounce. But just like I said, you drop below 196, that'll open the door back to this prior low at 191.33. You break that, you're going lower. So some really tricky setups here. And if you're not comfortable with tricky setups, or you're not in a scenario where you're a very active trader, I think you've got to pick your spot if you're trying to swing trade it at a point where you're comfortable letting that trade play out over a number of days. So I think here this morning you can use this 197.50 on the 2-hour chart as a place to get long, because that would be a recapture of this level, and then that would open the door to 202.50 and then hopefully a run up to 206. Facebook. We made a reach down yesterday, almost to this prior low. What I want to point out is the bullish divergence that's present. At the first low, we were down here on momentum and here on RSI. Now down at the essentially the same place on price. We're at higher levels on PPO and higher levels on RSI. That's the bullish divergence that favors a move higher. Now, if these bullish divergences are burned through, what I mean by that is RSI rolls over, momentum rolls over, and price loses this prior low at 298.94, it's going lower. So you can use this line, the prior low, as a line to shoot against on the short side with a stop just above. Apple, really important level that's being carved out is this 163. You can see quite a number of candles made a run for it. Yesterday afternoon, it was rejected on the FOMC, came down and then recaptured this 159.50. I think that's your pivot for today. Don't forget that earnings are after the bell. I'm not a guy that plays earnings, so if you adopt that type of mentality, what you're trying to do today on Apple is get, if it happens, some kind of pre-earnings move, whether they sell it or buy it. I think 159.50 is your pivot. Tesla had the breakdown, put in this nice bottom here, multi-candles reaching down to 860 where the bears could not break it. And then we got a kickback rally into 970. Last night was earnings. From what I could tell pre-market, it's basically unchanged. So there was a dip, and then they bought it back up, and I think they're going to open around 940 somewhere. I think that's your pivot for today. I think a move above 970 would open the door up towards 1,000, 1,010, 1,015 to this downtrend line. And if it can take that out, then there's, excuse me, quite a bit of room to run to the upside. On the downside, I would be aware of 920, 900, and then 860 on the downside as important levels. Microsoft, we've got this big downtrend line on the 60-minute. You can see that after we made this capitulation low the other day, we've rallied. We had a fake breakout. Not sure if that was Wednesday or the day, I'm not sure if that was yesterday or the day before. I think it was yesterday. But anyways, 302.50 has been a problem here for a number of hours. Back here at this prior high as well. You can see here there was support, resistance, and then a lot of resistance. So that 302.50 is a big line. And if I were going for a swing trade, what I would be doing is having an alarm at 302.50 and let whatever happens, below trend and below 302.50, let it just, chop itself to death if that's what it wants to do. But then be ready to go on a breakout above 302.50, and then that would open the door to 310, 312, and then up towards 319, where we got the original breakdown. I think that's a huge level up at towards 319, 320. But, if you got long at 302 and made 319, I think you'd be pretty happy with that. So, anyways, be cautious on the long side below trend if you're a swing trader. Amazon, very similar to the Facebook setup. We've got some lows here. We tagged it yesterday and they bought it up. We've got bullish divergence present on both PPO and RSI. As long as 2750 holds, I think you can be long against it if you're a, nimble Amazon type trader. I think that's fine. You get below 2750 and specifically below this prior low at 2705, you break the prior low, you're going lower. I mean, it's just as simple as that. So I think swing traders, I think you're going to want to see this downtrend line broken to the upside. And if you can get back above 2950, which is the low side of our big box, let me just go over there and show you that. Here's the big trading range. I think really to get some upside traction, you're going to have to recapture this bottom side of the box. And that may be a tall order because we're in full bear mode on Amazon with price below everything. I mean, it's even below the 8 EMA. You can see that here, that that is at 29.50. So pretty bearish posture for Amazon. Google. I mean, this is why I draw the lines, right? Downtrend line on the 60-minute. We put in a low down here. We rallied up right into that trend line where price failed. We came down in the afternoon and filled this opening gap. So I think for swing traders that are looking for a long, 26.20, take that out. And then you can shoot long against that level with the stop just below. And then you can look up towards 2,700 and then 2,750 where this open gap is. On the downside, the low is very well defined here at 25.20, maybe a little bit less, 25.15. You break that, then I think you can be short against that with a stop just above, on the premise that when you take out the prior low, you're going to bring in more sellers. Netflix had a little bit of news. I guess Bill Ackman, hedge fund savant, has taken a long position in Netflix. That may give it a little bit of juice this morning. Hard to tell. But I just want to show you this setup again. Prior low tested. You could call that a double bottom. We've got bullish divergence on both PPO and RSI. Price is at the same point, but higher levels on the indicators. I think if you're a nimble trader, you can be long against 360 with a stop just below. Your first target's going to be 385. You break above 385. Your next target is 410. And then you got the $100 gap above. So, I mean, this is an interesting setup. If that's going to be a catalyst for the stock, I mean, we're just going to have to wait and see. And I think a lot of this is going to be predicated on, what is the market as a whole doing. I think any kind of time where you've got a nice potential setup for a long, you're going to want to see broader market strength. I don't think Bill Ackman is going to have enough horsepower to, rocket this thing higher if the Qs and SPY and everything's falling apart around it. I think in that particular situation, they would, run it up and then fade it with the rest of the market. So if you see some market strength and you see this 360 holding, I think then you could take a shot on the long side here on Netflix. Semiconductors. We put in the bottom. We ran up and actually touched this 38% retracement fib. And that's a good example of how that level can help you. Why? We put in the fibs. Here's the 38% that was right on technical resistance as well at this 279 level. Reached up for a tag and then reversed. I'm not saying that was an easy trade because this is all, FOMC type stuff, but it just shows you that there is muscle memory in price. It reached up right to a specific level and then backed off, actually came down and filled the morning gap. So, it shows price. There was muscle memory down here at 265. So for today, I think you can use 270 as an active pivot. One thing nice about the semiconductor chart is we've already broken above that 60-minute downtrend line. So that is a check mark for the bulls because they took out downtrend resistance. Now it's all about, can price recapture these levels at 275 and then 279, and then that would open the door up towards 287.50 and then 292 at these other fib retracement levels and technical resistance. So that's where we stand. So let's do a quick recap. Fed has stated that they're doing what they plan to do, wind down asset purchases and start an interest rate hike cycle in March. Sentiment is very bearish. We've got oscillators all but maxed out, down at -80, -90. Short term, yes, we can go lower. We can stretch that rubber band, max it out even more. If you're a nimble trader and you see prior lows or important technical levels break to the downside, you can be short, but you got to be very nimble, and you've got to be hyper aware of just where we're at in terms of the oscillators. I'd hate to see you get caught with a bunch of stuff short when they initiate, whenever it is, this afternoon, tomorrow, that vicious rip your face off short covering rally. Be very aware of that. And then let's see if we get that rally to relax the oscillators. Don't forget, we got Apple tonight. Earnings, that'll be widely watched. And also, just looking at this list, got a lot of Dow components. Visa, McDonald's, MasterCard. So those are important names in the Dow as well. So one last bit of advice. With VIX this elevated, one of the things I like to do that makes it a little less scary and a little bit more manageable is to cut down your position size. Trade half size, because the vol is so high, you end up making the same amount of money that you would, in a normal tape with a full size. So let's just say, I'm just throwing out numbers, I'm not making recommendations. Let's say a full size for you is 10 of something. 10 options is your normal size. What happens is, because of the vol and because you can't keep your eyes off the P&L of that position, you get hyper nervous and you'll get freaked out on head fakes. So, and then you'll close your position, at a loss, and then 5 seconds later it reverses. So what you've got to do in a high vol environment is cut that position size down to 5, half size, widen your stops a little bit, because with the vol, it's going all over the place. Just pick a place on the chart where you're wrong if your stop gets hit, and then just trade a half size. I think, excuse me, I think that'll do a lot for your trading psychology, that you're not going to be, sweating bullets on every 5-minute bar, because your size is going to be a lot less. And so that's one way to approach it. And if you are a nimble trader in a normal tape and you're not comfortable in a higher volatility tape, use this opportunity as a way to get some experience. If your normal size is 10, trade 1 or 2, right? Don't view this turbulent market as, I just have to step aside and not be involved. Be involved, but at a micro level. And then over time, you'll bank that experience working in rough water so that when that comes around again, it's not going to be as scary. And so don't view this time as I'm going to make all this money, but view it as a learning time where you can gain some comfort in choppy waters so that down the road, maybe you can bump that micro position into a half position where you go from 2 to 5. Okay, now I'm going to try that. Get real comfortable in that position, and then you will have advanced your trading without putting a ton of money at risk or putting your trading psychology into a vice, right? You don't want to go from a guy that only sails in smooth seas to a guy that wants to tackle, a hurricane all in one swoop. Go from calm water trader to a guy that can handle some moderate to medium chop, and then you'll be building your skill set as you go along with not a lot of focus on the money. So maybe that tip will help you. So let's wrap it up there. Hope you found the analysis helpful. Again, please hit the subscribe button and the alarm bell. Post notifications. You'll get everything I do on YouTube. And then jump over to the show notes. Join the team. Get an invite to our trading room. We've had several new additions in recent days. Good to have those guys. I think you'll find it's a nice group of people, aspiring traders, all trying to work together with good ideas and helping each other improve each and every day. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you next time.